towards the revenue leakage. They are looking at making laws not for the compliant person, but for the person who's escaping the net. But they don't build in any accountability to catch him also. They know how to catch him, but they don't want to build accountability because they are able to fix up their haftas, monthlies, monthly, quarterly, with return. They have their, and they actually are very active in doing this. Of course, when I gave this lecture, which is being shared with the department, this hafta business I have not talked about. So you will find even the GST law is an amalgam of all the laws, and the procedural parts of it are very draconian. They have taken the worst out of VAT and excise and customs, and it's actually very frightening as of now, and certainly will fail if it comes in the way it is. But we are all there to see that it does well. In fact, our next initiative in indirect tax is that by the end of the month we are going to give them clause by clause what should be changed. We also will give suggestions so that they can cut paste it. Normally that's the best way of giving to the government. I'll give you one example. Last year we looked at transitional provisions. Transitional provisions based on the white paper only we had prepared, looked at all the things. 29 specific areas we chose. In Bangalore a research group was set up. Then we offered it to the indirect tax committee at Delhi, which also looked at it and then gave it back to us, and then we again did something, and then jointly, finally that transitional provision was given to the CBEC. Out of 29 of the transitional provision, it's available as a free download for you on the indirect tax site. You will observe that in the law, 24 are there. They have cut pasted from our material only. And they have left out 5. We were analyzing why they left out 5. I think 3 of them are because for each of the things which are left out, they stand to lose around 1,500 to 3,000 crores. So it was again a revenue bias exercise, where they were losing around 10,000 crores. That part they have not accepted. But we will again say, you should not look at revenue when you bring in such a big law. It is like, looking at the cost of salt when you are making chicken. That you should not do. If you don't put the salt, then the chicken is not going to come out well. Transparency is something which we have been moving in the past regimes, and in GST, substantial change where you don't have to interact with anybody in normal course. So this is something which is already happening. Accountability, we see that they have made 100% accountability for the taxpayer. Everything he is accountable. If his vendor does not follow something, he will chase the vendor because he will lose the money. Who? The buyer. So customer will always control the vendor's tax compliance. He will ensure that the vendor is compliant. And this is what they have tried to do. They have shifted their job onto the taxpayers themselves. Unfortunately, they have very few time limits. Whereas there are a lot of time limits which are put for the taxpayer. And I think that is something which you will hear a little more about it from my subsequent speakers. Now, if I am going to get into this area, who all are relevant? How many of you practice VAT or service tax or excise? Can you lift your hand? Okay. For all of you, this law is going to be almost same. In the sense, the principle is the same, and if you know one law, you are already ahead of others to some extent. At the same time, I was just saying in the morning that between, say, a person like me who is doing all these laws, I do customs, excise, VAT, service tax, CST, I do all, including FTP I have started. But the difference between me and a fresh starter is only 3 years now, though I have been doing this for 27 years. But difference between me and a starter will be just 3 years. And a starter may be able to read much faster. The present law, many of the juniors here in this crowd itself will know the present law better than me, the model law. I know only the basics, I know the fundamentals, but I don't know the law because I have read it, but I don't remember. Many of the youngsters here will say section so and so and all. I don't know any sections. So it is also going to collapse that senior-junior business in this indirect tax practice. So it is a place open for anybody to enter. All you have to do is spend a little time and get expertise. So this particular slide may be important for all of you. How many of you are interested in indirect tax practice itself? I think the numbers are substantially higher. We also have people, large number of people from industry. This is also something funny. The management of the Gurgaon branch may like to note that any indirect tax program, you always have people from industry. And if you have a workshop, you will be surprised, your maximum number of people will come from industry only. If you have a, say, 7-day workshop on GST, you will have 60% will come from industry. That is something you can look at, because we are missing them out in many of our seminars. So those of you who are interested in practice, these are the places from which you have to get expertise. Say, I don't know about VAT or CST. Then definition of business they have given now, but this has been lifted from there. So what about all the Supreme Court case laws in CST? Very useful now, because that definition only has been picked up. The market value has been picked up from that. The works contract thought process has been picked up from that. Agent is from that. There is also an aggregate turnover. They exactly picked up from VAT and so discount. The concept of quantity discount, when it is allowed, when it's not allowed, cash discount, when it is allowed, when not allowed. Little of excise also has come into discount, but basically it is from VAT and CST. From central excise is applicable on manufacture and payable on removal. And supply is some, can say a wider term than removal. And therefore, that concept of removal is going to be very important. Case laws, especially the Supreme Court case laws on this will be useful. Job work, they have even lifted one. 43A is equal to 214/86. Notification 214/86 is there for before I qualified, and the same thing has been included in the VAT, in the GST law, section 43A. Provisional assessment, adjudication, demand penalties, all these are mainly lifted from the excise law, but some of the worst parts of the VAT law have been added in. That's what has happened. Customs is also relevant because the concept of related persons they have taken from that. The concept of the value of similar goods or supplies has been taken from customs. So then again, those case laws which are there will be very relevant. Service tax, you have a large amount of borrowal. The place of provision of service, reimbursable expenses, consideration, host of things under service tax, a lot of cut paste from service tax. SENVAT credit rules, which is equivalent to the input tax credit under VAT, large amount of the provision of credit has been taken from that, and they have added in something called a matching concept, which I think Raghuraman is going to take you through in the afternoon. A little of foreign trade practice. Some other laws also have been considered, but I thought I should add ICAI, because finally what you and me never studied, though it was there, accounting standards, we may be forced to study now, because department will start studying. We can't be behind them. So I think business vertical as per AS 17 is what they have borrowed into this law. Business vertical is where within a state I have a separate registration for separate types of businesses. So when will GST come? We are assuming that in 19th you will have the bill being passed, that is the amendment bill, and maybe by the end of the session itself, the act, model act and rules and all are ready with them, they'll get that also passed. So in August itself, we'll finish this exercise of uncertainty will go away. This is what I'm assuming. After that, it has to be validated by 50 states. GST council has to be formed, they'll have to meet, but I expect this all be done in a hurry. Then they will recommend various things like the rate. Your rate will not be known till then, till the GST council gives that rate. So that will be after, say, whatever, 2 months or 2.5 months. The feedback time they have given us is little less, I feel. Just last month, we had a meeting where the revenue secretary called us for a meeting to make this training material, and they said you have to give the training material to us by end of this month. We said, sir, you have not even given us the law. He said, no, it's going to come, we'll give it to you, but you be ready. I said, how can you be ready without anything? Give us unofficially, you give us. Oh, no, we can't. So finally we also waited. When it came in the middle of June, we took it, and as I said, we are very happy that we said we'll take 1 month, and we delivered it yesterday. We have given them the pen drive with a letter. This also proves one more thing. They are forced to come to us now. Earlier they could have done without us, now they cannot do without us. So therefore many other advantages will come. If you observe in the model law, there is one section, I know very few of those sections, 42(4) I think, where just like tax audit provision is there. So now after this law gets passed, maybe we have to train ourselves in how to do the audit effectively and avoid giving remarks like not applicable, dash, and try to avoid a responsibility as we have done in income tax. See, the moment you avoid responsibility, somebody else will come and take it. We have been avoiding responsibility in this institute as members, maybe individually, collectively, elected members, all are at fault. Finally, the government may just take it away. Tomorrow they say, no, tax audit not required. Finished. That's the end of tax audit. Because they will look at what are they achieving from doing it, no? So we have to ensure that when we do the GST audit, we do it properly. We consider the interest of the stakeholder, the government also, and not only the interest of the client, which is what we are supposed to do anyway as chartered accountants. The feedback time may be enough, but the training time I think is inadequate. Officers cannot be trained so easily, and first thing which requires change in them is the attitudinal change, and I don't think you can change the attitude so easily. None of us can change our attitude. Mostly we die with what we are, unless in between we have a paradigm shift in our thought process. And this lot of people in the department are not going to change. Nobody is going to change there. They are going to be there only. So we are going to have a tough time with the attitude part of it. Rules are already ready as I understand, so that may not be a problem. Maybe by April, with a little of pain, we'll certainly have GST in place. Broadly, it is a tax which is adding up all the manufacturing taxes and indirect taxes. It is destination based generally. I can't say it's destination based in all cases. Presently, goods are on origin based, services on origin based and destination based for some. It's going to be a multi-point levy just like VAT. Those of you who are practicing VAT, you know what it is. It's exactly the same. And only thing here, you can take credit for services also if you are a dealer. And if you are a service provider, you can take credit for excise and VAT also. That's what is the difference. So more credits which are being, to the extent you pass on, you are advantaged. To the extent you don't pass on, it cascades, it is a loss for you. The loss will be yours, not the other person's, unless you are selling to the final consumer. Wherever you sell that to the final consumer, it doesn't matter. Final consumer wants only one price. He is not concerned with your rates. We expect rate to be between 18 and 20, and there may be a merit rate. See, we have large number of rates now. Each state is having a different rate, and for same commodity, one state will be having 4 or 5%, and neighboring state is having 14%. This is something which is common. This probably will almost disappear. I can say it will become only on exceptional basis. Like you'll know, for in this state, 2 items are there where there is a difference. That's all. It will be like that when GST comes. So they will probably have a merit rate for those goods which are essential, where it's difficult to collect tax, like works contract, maybe. I don't know. We are still hoping. And they would also be exempted. Exempted, why they have not frozen the exempted list is, each state has its own issue. For example, maybe Punjab they eat more rice and somewhere else they eat Punjab they eat wheat and somewhere else they eat rice. Punjab may exempt wheat, whereas that state will exempt rice. So they will give some amount of leeway for the states to have some exemptions. And then for the export related, we hope that it will all be zero rated. At present it is quite restricted. That zero rate is restricted. There is a thought process that states will lose. Actually, no state will lose, in my view. Not a single state will lose, because GST will increase the size of the basket, and states will get part of service tax, which is growing rapidly. They are going to get part of the excise duty, which is 3.17 crores is what has been thought of, and I think as I said, it may be 3.5 crores, 3.5 lakh crores. That also, some part of it will come to the state. Earlier they were not getting this 3.5 lakh crores. Add 3 lakh crores of service tax, 6.5 lakh crores. What is the total collection in VAT? 6 lakh crores. So the basket itself is becoming bigger, so you are bound to get more. I think that there is no problem for the states at all. They are also going to get a little of the customs duty. In the past, custom duty was there, then you had a CVD or additional duty of customs and special additional duty. And say it is 2 lakh crores, at least in the 2 lakh crores, 1.25 is these two taxes, that also gets added. So actually the states may be ending up with having 8 lakh of sharing and giving up 6 lakh. They are not actually giving up 6 lakh, they are sharing 6 lakhs. So I think states will do better. Center will do better because the taxes compliance will be better. Whatever center gets benefit, state also gets benefit. However, states which have higher consumption like Kerala or West Bengal may finally find they get a small push, because in the initial stages they will be collecting much more taxes than they hitherto were collecting. So I think that is what is going to be. Let us see when the next year, if we are still having a seminar, you all can look at that and say, sir, what you said that day was correct. So I think more taxpayers is one of the things which is going to happen. Stock transfers are going to be liable. So this is a negative part of this whole story. There is a lot of money which is going to, whenever we transfer, say I have a process by which I transfer my goods to 5 places. At every place there could be a tax being paid. So that means credit is going to become very, very critical. I have to ensure that credit is taken, and also the differential only is the cost to me. Otherwise, how much of working capital you will get locked up if you are not keeping accounts properly? Let's understand and realize that in India, the job work industry, of course job work I should not take example. If I were to look at dealers, how many of them are keeping accounts? What percentage of dealers are keeping accounts? Only in the end of the year, chartered accountants go, make up the books, then do the audit, and then everything is over, right? At least in Karnataka, Mofussil Karnataka, 80% of the dealers don't know what accounts is. They only give the bank statement, and whatever bills they collect in a bag, they give it to the chartered accountant. And sometimes this bag comes to them only in September. Yeah. After that, they have to do everything. So, what about these people? How can they survive then? Can you make them extinct? It's a very serious question. Can you make these people extinct? Do we have the right as India to make certain people lose their businesses? Constitutional article, fundamental rights give us a right to do business or profession. So if you put such a condition which makes me lose my business itself, I can challenge it. And it will be struck down, let me tell you. Supreme Court will simply strike it down. If I am made to go on the road without, though you may say, you are supposed to keep accounts, but all these years I have not kept accounts. Now I am being forced out of business by the policies of the government. So that is why whenever VAT comes, the government falls. And that's why no government will put VAT in the year of seeking elections. Even in Australia, the Howard government had to go after VAT came. Anyway, it's not a real VAT, so there you have some survival for the government also. It's severely cut up, and so there are certain principles of GST. Only the first band I am taking. After that, the rest of the speakers will be taking. What are the main concerns? Non-inclusion of the GST rate is something which which Congress has been holding on to for a long time. They are asking for the impossible, is what I feel. So that you just can't comply, and since you can't comply, you will not do it, and this thing will not get passed. That is what I think it is. However, there is one cause of concern. This rate is going to be given to the GST Council. And if it is given to the GST Council, are you creating one more monster? Whenever power is concentrated in even normal human beings, their head goes away. Examples are our own council members, central council and regional council sometimes. When you get enormous power, they lose their earlier, very fair, decent guy, now he's become a rascal and all that. So, I fear that part of it. Huge compliance cost versus multiple filing. Let me look at a service provider. Many of us are doing service tax practice. Let's look at one client of ours who is having some 5 places of business, 5 crores of business he does throughout India. If you are looking at this particular person, how many returns he has to file? Earlier he used to file 2 returns in a year, right? That's it, nothing else. Twice he used to file return, centralized registration, over. Now in this regime, he will have to file at least 3 or 4 returns every month for every location. So how much are we talking about? 4 into 5, 20, 20 into 12, 240. 240 times he has to give information to the government. So is it workable? I don't think so. This is what we are telling government. Please don't do this. What if I have in 25 states? This multiplication becomes bigger. We're talking about thousands of returns. And the moment you make a reconciliation mistake or an entry mistake, say instead of 69 you put 96, you and your customer both are in trouble. He will not get credit. You are in trouble because you have to now revise it and do it. So it is going to create amazing problems unless you are totally equipped with ERP and have a system of raising the invoice through the system itself. No separate invoice and keying in. Your system should be able to, first of all, give out the invoice so that it picks up those details from there only. So the first entry you can check twice, thrice if required.